July commodity market outlook. What if I told you that almost every major commodity corrected last month, but the biggest opportunities may actually be forming now? Gold is struggling in, crude oil has erased most of the geopolitical premium, industrial metals are divided, and natural gas could be preparing for a breakout. So before you take your next commodity trade, let's decode what really happened in June and more importantly, what could drive the markets in July. June was a month of cooling prices across commodities. Gold fell over 8% in rupee terms over the month, silver corrected nearly 14%, crude oil dropped more than 20% from the last month after Middle East tensions eased. Copper and aluminium also came under pressure as the US dollar strengthened. But here's what's interesting. The correction wasn't driven by a weak demand alone, it was driven by changing expectations around interest rate, geopolitics, and the US dollar. Let's begin with gold and silver. Despite geopolitical tensions, gold could not sustain higher levels because the stronger US dollar and rising bond yields reduced investor appetite. The Fed continued to maintain a hawkish tone. Markets are even pricing in the possibility of another rate hike in 2026. At the same time, gold ETFs witnessed an outflow while central banks continue to accumulate. China extended its gold buying streak to 19 consecutive months, showing that institutional confidence remains intact even if retail participation has softened. Silver remains a slightly different story. Industrial demand continues to support prices, but weaker manufacturing data and easing geopolitical fears kept the metal under pressure. For the month of July, expect gold and silver to react sharply to US inflation, labor market numbers, and Fed commentary. Moving to base metals, copper remains caught between two opposing forces. On one side, Chinese inventories are falling, suggesting improving demand, whereas on other, markets remain worried about possible US tariffs on refined copper and the impact of a stronger dollar. Result, copper is likely to stay range-bound until policy clarity emerges. Aluminium had one of the sharpest corrections this month. As Middle East tensions eased, supply concerns disappeared quickly. However, global inventories outside China remain tight while demand from electric vehicles, renewable energy, and infra continues to provide long-term support. And for zinc, it tells an interesting story where mine production has improved but refined supply remains tight, keeping prices relatively resilient despite weaker industrial demand. Now the biggest story is in the energy segment. Just weeks ago, markets feared disruptions around the Strait of Hormuz. Today, shipping has normalized, oil flow have recovered, and crude prices have fallen sharply from their highs. The easing of US-Iran tensions removed much of the geopolitical premium that had pushed the oil prices higher. Still, this story isn't over. Any disruption in negotiations or fresh geopolitical development could quickly bring volatility back into the energy market. Natural gas looks more constructive. Demand for electricity is rising because of summer cooling. US LNG exports remain strong, although inventories remain comfortable. Analysts believe prices could strengthen if weather-driven demand continues and storage builds slow. This month, don't just watch commodity prices. Watch the events like US CPI, non-farm payroll, FOMC meeting, commentaries from Fed officials, ECB and BOJ decisions. These events could influence everything from gold and crude oil to copper and natural gas. So here's the key takeaway. July isn't just about where commodity prices are today, it's about how inflation, central banks and geopolitics reshape the next move. Which commodity do you think will outperform this month? Gold, crude, copper or natural gas? Tell us in the comments, and if you want monthly data-backed commodity insights that help you stay ahead of the market, subscribe to the Commodities with Motilal Oswal. We'll see you next month.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.